Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And I have to tell you, I am most excited about this podcast, which I've alluded to before in a couple of podcasts that have been released recently. But today with me, I have one of the commissioners from the CFTC, the commissioner I happen to love the most, Commissioner Dawn Stump. Now, I don't know if I can even say I love one commissioner over the others, but anyway, I just did. So in the first instance, welcome, Dawn.
Thank you so much. And thanks for the kind invitation. I'm thrilled to be your favorite.
I don't even know the other ones, but because I know you, it's de facto.
I'm thrilled to be your favorite.
That's brilliant. Okay.
And speaking of Acting Chairman Bennett and Commissioner Berkovitz, I do have to start, as I have to start all public engagements, with a little disclaimer that any views I express today are my own and not necessarily those of the Commission that I'm very proud to serve upon, but they are exclusively my thoughts and views.
You know what? That's excellent, because we also have a disclaimer, which basically is nothing that we are going to be talking about today can be in any way construed as investment advice. You need to do your own homework. You need to do your own due diligence. And if you have any questions, go and seek out your own professional financial advisor. Oh, and I should also mention, my name is Aviva Ounap. I am the host of Crypto and Blockchain Talk. So let's go forward and have fun. So, and the thing is, I have to tell you this, a lot of people do not think of government and fun being synonymous, but in this instance, on my podcast, I'm going to have a whale of a time. So I am so looking forward to this. So let's first talk about the CFTC, and let's just talk about what the CFTC actually does. Now, we know the acronym stands for the Commodity Futures Trading Commission, but can you give a definition that a 5-year-old would understand exactly what the CFTC does?
Well, I'll try. So in 1974, the CFTC was created in the United States as an independent agency. So we're a relatively new agency. But prior to that time, the Commodity Exchange Authority, which was housed at the United States Department of Agriculture, historically, because most futures contracts were based on agricultural commodities, oversaw these markets. So it's not as though we are, the regulatory structure around these products is new, but as they evolved beyond agricultural products, the powers that be felt it was necessary to have a devoted regulator. So since 1974, well before 1974, but the derivatives markets we regulate have grown so substantially. So as the derivatives markets evolved beyond agricultural assets, we've now grown to regulate things including derivatives utilized by manufacturers who are managing risk associated with things such as currency price fluctuations in international markets, utilities that are facing energy production disruptions, pensions hedging against retirement savings losses, and even banks who need to guard against interest rate fluctuations. So all of these things fall under our umbrella to the extent there are derivatives products associated with those underlying assets. So as commissioners, there are 5 of us. We oversee the agency. We're nominated by the President of the United States, and we have to be confirmed by the United States Senate. And we're always in a state of transition, and some may not be aware that the structure of the CFTC requires that each year, one of the 5 commissioners' terms is expiring. So it doesn't matter who the president is. Each of us has a term that expires on a rolling basis in order to ensure that we have new thoughts and ideas coming into the agency from time to time, and also to balance those views and experiences so we can have a voluminous problem-solving contingent of commissioners.
That makes absolute sense. And so from what I also read, it says here that your term expires April, which is not really too far. Is there such a thing as having an extension, or what happens after April of 2022?
Yes, so my term does expire next April. I can ask to be reappointed, or I can stay for a period of time beyond the expiration of my term, which is probably more likely, and that they don't make you leave on exactly that date because they don't want to have vacancies. A commissioner may stay for, it's typically up to a year and a half. It's actually, the deadline is actually associated with the time when the term is coming to a close. So my former colleague, Commissioner Brian Quintens, his term expired well over a year ago, and he just recently left the agency. And so there are opportunities to stay beyond the expiration of your term, but those are quite limited and usually to about another year, year and a half.
How did it even happen in the first place? I mean, were you just working at your desk feverishly one day and then you got the golden call? I mean, how did it even happen that you became a commissioner? What was that step that happened?
So many years prior to coming to the CFTC, I worked as a staff person in our Senate, in the United States Senate. And one of my responsibilities was oversight of the CFTC for the committee. I worked on a committee that typically meant things that were related to futures contracts, but I happened to be there during the financial crisis, 2007, 2008, at which time the CFTC was brought into a debate surrounding how we were going to regulate over-the-counter derivatives. And I worked on the committee that worked to write the new legal authorities for the CFTC to provide them with more regulatory authority and some new enforcement authority as it relates to over-the-counter swaps, we call them in the United States. And so that was probably one of the most alarming times in my career, but I learned so much and I engaged with the CFTC. At that time, Gary Gensler was the chairman of the CFTC. There were a number of other commissioners that we engaged with on a very frequent basis. So I've known Gary Gensler, who's now the chairman of the U.S. SEC, for a very long time. So that's my background. I then left and went to the private sector and worked in the derivatives area. I worked for an exchange and I worked for a trade association. And then, I guess it was 2017, I received a call from a former colleague that I had worked with during the development of the Dodd-Frank Act, which is our authority to oversee over-the-counter swaps, suggesting that maybe I might be interested in being a CFTC commissioner. And I have to say, at the time, I can honestly admit that I knew I had more to give on the public service front, and so I was very intrigued by it. And the process of becoming a CFTC commissioner can be very lengthy. For me, it was 441 days from the time I nominated until I was confirmed. So it's a very intense process. I do love my job, and it has provided me an opportunity to return to public service and do it in a different way. I'm very familiar with our authorizing statutes because that's where I worked previously. I also think my private sector experience helps me do my job because I worked for people who were regulated and heavily regulated, not only by the CFTC, but the SEC. And so I understand, kind of how they view the agency. And I've come to really appreciate, it's a small agency, but I really appreciate the men and women I get to work with. They are the most dedicated of public servants. I'm
a fan of Gary Gensler, for sure. And I saw that he was catching some flack for some reason during, I think, one of the House Financial Committees. They had recently a meeting and he really caught some flack. And I was watching that and reading about it with interest. Gary Gensler was the head of the CFTC, and he also taught some incredibly complicated courses on blockchain at MIT for 3 years. I really find it quite interesting because I thought he was having some things actually said to him which were quite unprofessional, because there's a lot of people in government, as Ted Cruz pointed out in another article, which was published in a number of tier 1 publications, where Senator Cruz said that many people sitting not just in the House, but in the Senate didn't even understand most of the stuff we're talking about when it comes to cryptocurrencies, nevertheless even talking about blockchain, which is the technology that it's built on. And so Cruz went on to say it's going to be very hard for anyone to be able to have a voice in terms of the regulation who sits in the House or the Senate if they don't even understand what they're talking about. And I found that that was quite interesting. But what I also found interesting, and we're going to go forward to go back a bit, is that one of your old bosses, he used to be the chair, Chris Giancarlo, he said in a tweet, which I know you don't agree with, but I shouldn't have said that. I'll let you talk about that. That there's only one U.S. regulatory agency with the experience to regulate the markets for Bitcoin and crypto, and it's not the SEC. It's the CFTC. And then he goes on to say that if the Biden administration is serious about sensible crypto regulation, they need to nominate a CFTC chairman. So I wanted to jump in really hard into this, how the CFTC sees itself in the future. And we're going to go back to this in just a minute, because what I want to first discuss, because also one of the things that happened when I first met you is you said you were a derivatives girl. And I thought, oh, that's so cool that she's a derivatives girl. So I thought we would first talk about what derivatives are. We'll talk about how derivatives and commodities versus securities and all of this, and then come back to who is the best, just have a little friendly debate on who would be the one, which regulatory agency would have the foremost experience. Now, before I actually questions what are derivatives and how does crypto fit into all this, do you want to actually give already like a little teaser on what your opinion is on what Chris Giancarlo said?
It'd be left to Congress to decide which regulatory body is going to have the authority to regulate these products. And so there are those who are well steeped and knowledgeable on these different challenges that we're facing with regard to the evolution of an entirely new asset class. Second, Chris is a dear friend of mine, Chris Giancarlo. When he was chairman, one of the things I probably should have said about the way the CFTC works is that each of the 5 commissioners are independent. So I didn't work for Chris. In fact, each of us oftentimes votes differently when we have to vote because we are tasked with being independent from one another. It was not often when he was our chairman that I disagreed with him. And so when we talk about things that are on Twitter, sometimes I wonder if things don't get lost in translation. My view as to whether or not the CFTC is the appropriate regulator for all things cash crypto is that no, they are not. However, we already regulate a fair bit in this space. It's just narrower than the cash crypto, the actual asset that people are interested in. And so we can get into that a bit more. And the reason I'm not certain that the CFTC is best suited for that is because historically where we focused or what we've done. And so we can talk a little bit more about that. I appreciate Chris loves our agency and he very much wants to see it grow and further develop. And we do have an amazing staff of people who I'm certain could oversee the cash cryptocurrency markets if we were tasked by Congress in doing so. But at this point, that is not an authority that we have as the CFTC. And I know you're going to give me the opportunity to expand upon that. So I'll just stop there.
You're going to have plenty of opportunity to expand on anything in any direction you would like. I think in the first instance, what we want to do, and considering that this is very much we cover everything in terms of this podcast. And of course, it's also streamed on our sister radio station, Crypto 24 Radio. And we have a lot of people who are still learning about everything in this space. So you are a derivatives girl in a derivatives world. I was about about to break into. It's fantastic, made of plastic, but I don't know. Anyway, the whole point is that derivatives are one thing or one section of finance that the CFTC covers. And a derivative is a contract between two parties, which derives its value from the underlying asset. Now, and then that is split up. I should actually continue first. The types of derivatives that are out there are numerous. The most common types are futures, options, forwards, and swaps. And Dawn's already alluded to swaps. She's actually already talked about that, and some of you may be writing that down or scratching your head or going, yes, I already know all about that. Just to give you an idea in terms of futures, if I have some Bitcoin, but Dawn thinks that this Bitcoin is going to go up to twice the amount that its current value is, we can make a contract together. And then when that period of time is finished, no matter what the price is, Dawn has to pay me the amount of money that she agreed with me in the first instance that was going to be worth. That's the value of the underlying asset. I'm going to throw it again to Dawn, and I'm going to ask her if she has her own special derivatives definition that she would like to put forth to explain what derivatives are in maybe a better way.
Well, you defined it quite well. It is the contract. I think the critical piece that sometimes gets lost when we're talking specifically about crypto assets is that the derivative has a value that is based on, and these words are really important, an underlying asset. So it's not the underlying asset itself that we're focused on. It's the derivative that is valued based on that underlying asset. And so another thing that you have to consider with regard to derivatives, when derivatives are listed on regulated exchanges, this is CFTC regulates, we expect them to have some elements of being a risk management tool or helping with public price discovery of the underlying asset. So those are pretty fundamental purposes of the derivatives contracts we regulate. And so as we've already talked about, historically, we've regulated futures contracts and options on futures that are listed on such regulated exchanges as the CME or the ICE Futures US. So those are traditional futures exchanges. The evolution of product development has seen a number of new entrants into this space who are particularly interested in cryptocurrencies. And so, these underlying assets are things such as commodities. And so this is where people sometimes get confused. So the term commodity, when it references the underlying asset, is defined in the CFTC's governing statutes, which is the Commodity Exchange Act. And that same statute gives the CFTC exclusive jurisdiction to regulate futures contracts on commodities. So in this case, we're talking about a derivative on an underlying asset. So I think this is worth pointing out because it doesn't ever suggest that we regulate the commodity or the underlying asset. We regulate the derivative on the asset. So I know that's somewhat confusing, but derivatives have a different function from the underlying asset. That is, the function of the underlying asset is something people want to have, or they need to have, or it provides an opportunity for someone. It can be a security, it can be a commodity, it can be currency, but the derivative is ultimately expected to be a risk management tool for the people who need that underlying asset, or to provide price discovery, price transparency in a way that the public can ascertain what the value is in fact meant to be.
This is where you're right. It does get sticky, and this is where a lot of people are confused because of this evaluation of a cryptocurrency as a security versus evaluating a cryptocurrency as a commodity.
If the question is, how are we going to determine which regulator is going to be responsible for overseeing the product? this distinction between commodity and security is not the right question.
Right.
A commodity can be a security. It can be a currency. They can simultaneously be the same, have various definitions that apply to them. So anyone who's attempting to find a path to a regulator, and I think that's important, that people who want to legitimize these products would like for it to have some regulatory structure. But they don't need to ask, is it a commodity or a security? Because that's not going to prevent, in the case that something is a commodity, it's not going to prevent other regulators beyond the CFTC from having potential oversight. So I know that's a little confusing, but we have products today that we jointly regulate with the SEC. Security futures products are jointly regulated by the SEC and the CFTC. There are various laws that apply to that. In some cases, it's very confusing, so I won't get into that. But I think this notion that the definition of commodity somehow puts it squarely within the CFTC's purview is inaccurate. So now I will say, if something is defined as a security, it is absolutely squarely within the SEC's jurisdiction. Their name is the Securities and Exchange Commission. They regulate securities and exchanges. We regulate commodity futures. It is a conjunctive term. So we don't regulate commodities and futures. We regulate futures on commodities. So I know that's confusing, but I wanted to point that out. And so I'm not going to get into the Howey test. That's how the SEC decides if something is a security. Should a financial product meet the identified criteria of the Howey test, the SEC is going to consider it as security. I think it's important point that whereas the Securities and Exchange Commission regulates securities, the CFTC does not regulate commodities. I want to say that up front to kind of define what we do not regulate. We regulate currently, and our authorities are to regulate certain derivatives products, and that's where we focus.
Okay, so because the SEC does regulate securities and commodities, obviously, which is in your title, Commodity Futures Trading Commission, is definitely part of you. I think that it does lend itself because, there are still people, there's still this whole thing about evaluating crypto in terms of being a commodity. Aren't commodity markets generally regulated less stringently than securities?
No, and I think this is such an unfortunate misunderstanding that perhaps the regulatory structure that applies to commodity futures is less stringent than the regulatory structure that applies to securities. So here's the way I look at it. The CFTC does have various allowances for the folks that we regulate, meaning that we have a self-certification structure where people can certify that their rules are compliant with our regulations. That does not mean that they call us up on a Tuesday and say, we're certifying that we're compliant with your regs, and they list a product on Thursday. Mm-hmm. Long prior to that certification occurring, we've probably had a dialogue with those folks for over a year. It should never be assumed that our structure is less stringent. It's just different from that of the SEC. Congress provided us with, in our statute, principles. Those principles are designed to encourage innovation. At the same time, we write rules that inform how those principles should further be defined. And so you have to certify to us that you conform to the principles that Congress has laid out, as well as the more detailed aspect of regulation that we've applied to those principles. So to suggest that we're more discretionary than the SEC, okay, maybe that's fair. But to suggest that we are any less interested in a strong regulation and compliance, I think that's what's critical. We are extremely committed to compliance. And I think in order to expect compliance, we have to be very clear about how we want people to entertain our regulations and apply them. And from there, if they choose not to do it, we have an enforcement division that will make your life very difficult.
Excellent. That's good to hear because, it is very much a debate out there. Many people want them to be recognized as commodities because they, in the United States, perhaps feel that they can get away with a bit more murder. I mean, I'm just being honest here. And, the thing is that because it's emerged, because cryptocurrencies have emerged as a store of value or, as a method of speculation, many people are saying that this brings it closer to being a commodity, like gold, because it's been used as a store of value. It's a very interesting debate, which, like you said, unless you're trying to figure out who it should be regulating crypto, which maybe I'm trying to do in an interesting way, find out who's going to be taking pole position on this stuff and how it's all going to be regulated at the end of the day, because the regulation of this stuff, it couldn't come any faster. It really couldn't. There's a lot of stuff going on out there where some very innocent people are going to be very burned because, of course, they don't have enough information. They don't truly understand in many instances what's going on. I'm sure that there are a lot of people who sit within government who understand this. I can tell when people are kind of just like nodding or saying things, but they don't really understand it. But you know how you don't scratch any further because you don't want to embarrass the hell out of them? I really wonder how many of those people of that ilk are actually sitting in some of these committees, because let me tell you something, this is not a word of a lie. We have heads of really huge global companies. We're talking like Fortune 500, if not Fortune 100, who have literally called us and said, can you do me a favor and explain this crypto stuff to us? And you're thinking, okay, all right, well, at least you're man or woman enough to admit it. And then we will go through a lot of stuff with them because there's normally one person in every company who may know some stuff, and that's the CTO. I've written a whole series of books on what crypto is, and there are companies who work in crypto who give these to onboarded employees who aren't in the development department because they don't know where they're working and what's going on, and they're working in the crypto industry. So it's one of these things where you're going to have a lot of people asking questions and a lot of people looking confused because commodities, derivatives, securities, these kinds of words are confusing to people, I think, depending on who your audience is. It could be confusing enough. But then when you add the extra layer of cryptocurrency and blockchain, you might as well be talking in a language from Mars. Cryptocurrency derivatives markets are booming. They have exploded. More and more of this is happening. And over 100 billion in crypto derivatives are traded. From what I understand, there's people who are really getting into everything to do with the crypto derivatives in pretty big numbers. We're talking about pretty significant numbers. I think that there's a lot of room for growth there, but I think that people still need to understand exactly what's going on and how that's going to be regulated. So here, I'll let you jump in.
Yeah. Okay. So before we get too far away from all the distinguishing factors that go into determining which U.S. regulator is going to be interested, I think maybe the public should think about it in a way that is, what is the function of the product? And so that may help determine how many regulators are going to be interested. It's not going to be one of us. It's going to be multiple of us in the United States. And I know that's confusing, but that's just the way our structure is designed. And so, I've indicated that the CFTC's regulatory authority applies to futures on commodities and derivatives. And that definition of commodity is broad. And so, for instance, we talk about Bitcoin being a commodity. It should be no more surprising to anyone than, say, corn, oil, or copper being a commodity. The definition of commodity in our statute is extremely broad. So the application of the definition does not preclude the underlying commodity from also falling into the definition of other terms simultaneously, as I've said. A commodity can and may be a security as well. So the way I like to think about this is that the CFTC has exclusive jurisdiction to regulate futures and swaps, but other regulatory bodies may be on the front line of regulating those underlying assets, again, getting back to that term. So for example, we at the CFTC regulate futures and swaps on interest rates, but the Federal Reserve in the United States manages the level of short-term interest rates through their monetary policy. We regulate natural gas futures, but the FERC regulates the interstate transmission and the sale of the underlying natural gas for resale in interstate commerce. So there are typically more than one or two regulators involved in regulating commodities in the United States. We regulate a product that is based on or derived from the value of that commodity. So it's really, I don't think this is ever going to be, you get one regulator if you want to be in this space and you want to be regulated. It's just not the way our system is designed to work. So when people who want to develop these products in a responsible way seek to understand the regulatory structure, I am sorry to say it is complex. When people attempt to avoid regulation altogether, you can be assured the CFTC is going to pursue enforcement actions, particularly when we're talking about things that involve crypto derivatives that we do regulate. So, since Bitcoin's a commodity, I'll just use that. The trading of futures contracts on Bitcoin by a U.S. person outside of a registered exchange, an exchange that is registered with the CFTC, is illegal. And the CFTC has, in fact, taken enforcement actions against what we call unregistered futures exchanges. This was actually the subject of a recent case we had against BitMEX. The CFTC has also brought enforcement actions against registered derivatives exchanges that have violated the rules that we have in place, such as the prohibitions on wash trading and prearranged trades where the underlying commodity is a digital asset, but it's the exchange that we're looking at here. We are regulating this infrastructure that is promoting and supporting and offering derivatives products. Now, there's a completely different situation in which the CFTC can pursue enforcement actions involving crypto in the cases of, listen closely, fraud or manipulation that involve the underlying asset, the actual cash and spot crypto transactions. So we don't regulate this cash product, but if there's fraud and manipulation occurring in that underlying asset, we have enforcement authority that is broader than our day-to-day regulatory oversight. And why do I mention this? Because it actually has been, we've used this authority quite aggressively. And, we don't regulate in the cash crypto market, but we have a unique role to play through this specific fraud and anti-fraud and anti-manipulation enforcement function. And that's because we need to investigate and conduct civil enforcement actions in this manner because the CFTC needs to know that those underlying assets upon which our derivatives contracts are valued are free from fraud and manipulation. Otherwise, it jeopardizes the legitimacy of the derivatives markets that we're regulating. But I wanted to talk about why enforcement actions are in two different buckets. We have enforcement actions against those who may be offering the products we regulate, the derivatives products, to U.S. persons outside of our regulatory structure. And then separate and apart, we've brought enforcement actions against those who are committing fraud and attempting manipulation in the underlying products because they jeopardize the validity of our derivatives products. Now, I will say, I think the CFTC could do a better job when we utilize this broader enforcement authority with regard to the underlying cash products in clarifying that while we have enforcement authority here, we do not regulate these products. I think that makes a source of confusion.
So you probably are aware that Coinbase just said on Wednesday that they plan on expanding their product offering to include trading in futures and derivatives. Okay. So, and you know that Coinbase is already in the sights of the SEC. We'll just park that aside. We're not talking about the SEC and what's going on there. And I can tell you personally, and there's a whole episode on me and Coinbase because I don't have any crypto accounts now. And the reason for that is because Coinbase really burned me. They basically, like thousands and thousands of other customers, not only shut down my account for no reason, but I couldn't actually get my money out. The whole thing was just a mess. We're talking about a mess, and I'm not the only one. Like I said, there's so many stories on the internet. It's unbelievable. But what I also found interesting was obviously Coinbase paid $6.5 million. And this is according to the CFTC. Place that you work put out this press release about how Coinbase paid this $6.5 million to settle the claims of the CFTC that it reported misleading transaction data. So we already know that they've got this like checkered history. They got their slap on the wrist. They continue to operate, even though I spoke actually on a podcast yesterday about Coinbase to a company that's going to start working with Coinbase. And the guy actually said to me, oh, it's not really their fault that they're like so bad at like taking people's money and shutting them out of accounts and in some cases allegedly misplacing a lot of people's money. And I said, how is it not their fault? Explain to me how a multi-billion-dollar company cannot get their act together on this and do things properly. So then they go, and of course, they now say that they're going to be including futures and derivatives in their product offering. And when I read this, I kind of laughed to myself and I went, oh, that's just hysterical. But anyway, how does that work when you have a company, even before it listed on NASDAQ, on the U.S. stock exchange, they already had a slap on the wrist and they still continue to operate quite poorly, in my humble opinion. And now they're going to be offering another band of products. I mean, is there any way to test that what they're going to be offering is actually done in a way which is not going to burn further people? Is there a way to see like these products that they're going to be offering actually are going to work and that money isn't just going to go missing or locked up?
We finalized the settlement with Coinbase in the case we had against them. I did write a statement. People can find it on our website. It was more about the fact that at that particular time, Coinbase was not operating in the derivative space. And I thought this was actually the first time I realized how much confusion we might be creating each time we bring one of these cases that Coinbase wasn't regulated by the CFTC. And I wanted people to understand that. And that's when we started developing some primers on what we do and what we don't do. But again, Coinbase was a case that at that time, they weren't engaged in derivatives offerings. At this point, if Coinbase is seeking to engage in offering U.S. clients access to crypto derivatives or any futures or swaps contract for that matter, they're going to need to come talk to the CFTC. And I'm sure they are talking to the various operating divisions that would be responsible. They're going to likely have to register with us in some capacity. And when they register with us, they will be expected to comply with a host of regulations. And I think it's incumbent upon us to help them understand what our expectations are. And again, as I said, I don't have a problem with bringing enforcement actions against folks who have made offerings to people outside of our expectations. But I think we do have to be very clear about what our expectations are. And so again, Coinbase, if they want to go down this path of offering, if they want to offer derivatives products to U.S. clients, they are going to need to register with us in some capacity.
Well, I think you might see some paperwork on your desk next week. Sorry. Why do I think that they haven't, let me tell you something. I have been in this space since day dot, right? And I'm definitely a blockchain girl in a blockchain world, like you're a derivatives girl in a derivatives world. But what I will say is, you know, that because of the lack of regulation in this space, which I know that now, and even Hester Pierce talked about it, she kind of said, as you probably are aware, since day dot in the crypto sphere, companies have assumed the position of, well, there's really no regulators out there to watch anything, so we'll just damn well do what we want to do. And the problem I have with that is that it's not the whales who are going to be hurt. It's not the whales who are going to be upset if any money is lost. It's the average Joe. It's average man. And average man is who I am. I'm average woman, but I'm the average Joe who's sitting out there, or Josephina, who, you know, when something does affect me and I know what's going on, I can only imagine what's going on with people who aren't completely 1,000% clued up. My hopes in this space are always in the purest sense. Like, I always want to see something good happening out of it. I'm definitely for regulation, because it's going to make the space stronger, and it's going to weed out those people who really don't care upon who they trod, especially wearing cleats, spiky shoes, for everyone who doesn't know what a cleat is. But the whole point is that it's really funny, because I speak to lawyers on this podcast, and they are telling me all the time that they have clients who they've already done whatever they were doing, which they knew in the first place was illegal, but now that it looks like they're about to get caught, they're trying to backtrack and refile papers, you know, in a way that they're hoping is going to grab back time. I can already tell you that next week you'll probably find some packs of paper on your desk. But, you know, I mean, I'm sure that, and Coinbase isn't even the only one. There's 1,000 companies like Coinbase. It's not, I mean, I can't even, and that's just in the United States. I mean, obviously around the world, well, we can't even talk about that. But what is your jurisdiction around the world? What happens if you have people who, let's say, are selling derivatives? They're selling products which you oversee, but they're based over in, I don't know, the Virgin Islands. I mean, how long is your long arm of the law? Do you have that reach?
Yes, we do. If they're offering products to U.S. persons, and we consider many cases that have an international domiciled headquarters. I'll just leave it at that, where there have been some claims to not offering products to U.S. persons. We know that's not true. So, you know, if you're going to just say it, you have to have the systems in place to ensure it's not happening. Now, here, I will agree. Well, I'm not going to put words in her mouth. Hester Pierce and I both struggle with this idea of, is it the case that because we've made it so difficult for U.S. persons to access these products, that they have no choice but to go seek them in foreign jurisdictions? Which case, I agree with her, and this is my word, not hers. Investors should be allowed to invest in what they have the tolerance for. It is not our place to nanny them. It is our place to ensure that the markets, we are market regulators, the markets that are offered to U.S. clients are, or that are registered with us in the United States, are well suited and free of, you know, fraud and manipulation and those sorts of things. And so we have a little bit of a chicken and egg problem when it comes to U.S. clients, U.S. investors being able to access crypto. And when I'm talking about crypto, I'm talking about the underlying asset crypto, because they want access. And I don't think we should prevent them access, but because there hasn't been any, I think there's been a lack of regulatory clarity around how U.S. cash exchanges will be permitted to operate. Now, I don't want to get into that, because that's, again, I've already established we don't regulate the cash exchanges. We regulate the derivatives exchanges. So I'll just talk about that. So With regard to the derivatives exchanges, we don't treat cryptocurrency exchanges any differently than we treat any derivatives exchange that we need to oversee. And that is not limited to those domiciled in the United States. Where we regulate futures products based on an underlying cryptocurrency, the entities that are registered with us to offer those products, we have a number of exchanges in the U.S. that offer Bitcoin futures or Ether futures, Ethereum futures, and where that is the case, they have to comply and prove to us that their products are not vulnerable to fraud and manipulation. It's an ongoing principle that Congress established for any derivatives exchange in the United States. And if they're unable to ensure that safety and soundness of the product, they can't legally offer the product as an entity registered with the CFTC. Now, beyond that, if someone's not registering with the CFTC but offering products to U.S. persons, we do have the ability to bring enforcement actions, and we will do so.
With exchange-traded funds, how involved is the CFTC in that process?
Yeah, so this is one of those areas where when you mentioned gold previously, I wanted to bring up ETFs. So I'm glad you circled back because I forgot. Gold's a commodity. The CFTC is going to regulate futures on gold, and the SEC is going to regulate the gold ETFs because they consider them to be securities. So that is a great case of where the same underlying asset has multiple regulators involved. So ETFs in the United States are regulated by the SEC, not the CFTC. That is not to say we don't have a great deal of interest in how and why people are investing in the ETFs, because some ETFs are based on futures, and we need to understand how they may influence the futures markets. So yes, we care greatly about ETFs, such as those that I think Gary Gensler has talked about, that are ETFs based on futures contracts in the crypto space. Mm-hmm. We are going to care greatly about how those ETFs may impact the Bitcoin futures markets or the Ether futures markets that we regulate, but they will be regulated by the SEC.
Talking about these ETFs, and you just mentioned about Bitcoin and Ether, there's 1,000 other coins out there who are also looking at doing something akin to this. I mean, that's going to be one hell of a regulatory landscape, isn't it, to oversee these many, many different cryptocurrencies and these different products that they want to come out with, all which fall under the guise of an ETF.
No, it's right. You're exactly right. These folks are going to need to be familiar with our current statutes. I'm not certain that we need to rewrite our statutes where derivatives are concerned. I think they're pretty robust as they are. So people who want to operate in that space, whether it's a futures contract or whether they want to offer a futures contract or offer an over-the-counter swaps contract or an ETF, they need to familiarize themselves with the regulations and the statutes that govern those things in the United States, because they are very complicated and very technical. And I know some people will say that hinders innovation. I think the way we regulate these things is agnostic to what the underlying commodity is or the underlying asset. I'll use underlying asset. We regulate them the same. How a derivatives contract or an ETF is regulated, it's fairly standardized in our regulations. And we don't need to differentiate between Bitcoin and crude oil in many cases. Now, because crypto is new and there are elements that are not well understood by many policymakers, including my own, we have to do a fair bit more due diligence when we're considering those products. But the regulatory structure is the same, regardless of what the asset is.
Let's just very quickly talk about then the volatility of crypto. As you just mentioned, you mentioned gold, you even mentioned oil. I mean, crypto is more volatile than anything that you've probably ever seen, especially as a commissioner. So does it worry you in any way, shape, or form about the creation of any of these products and the volatility that lies underneath, given as well people such as John Paulson, billionaire investor? We already mentioned Dr. Michael Burry. All these people who are saying to be very, very careful. Even the Swedish government came out, it was only this last week, and said this Bitcoin stuff is going to lead to tears. And they do not see it as anything more than trading, as they said in quotes, trading stamps. So, you have this disparity of view. You have, on one hand, people giving really frightening warnings. Yeah, very frightening warnings. And then on the other hand, you have countries adopting it, such as El Salvador and the Ukraine. And then, of course, you have CBDCs. But, can you just give me a comment on your personal opinion when you think about the volatility of crypto in general?
Yeah, it's very volatile. Right. We see it is more volatile than many of the other assets upon which we currently have derivatives that we regulate. Does that concern me in overseeing the markets I regulate? It doesn't concern me as much as I think it's a cautionary tale for people's risk tolerance. So if you're going to trade a Bitcoin futures contract on, I'll just use the Chicago Mercantile Exchange. Mm-hmm. You need to be prepared that you're going to probably receive a lot of margin calls, because volatility is actually not something we shy away from in the futures market. Why? Because our markets are designed to help people manage volatility. They're risk management markets. That's why they exist. If there's volatility in the oil market, we hope our futures contracts can help people manage that risk. So volatility is not something we're scared of in the futures market. In fact, it is one of the reasons the futures markets exist. However, when volatility persists, there is an expectation that you're going to have to post margin as a performance bond, that you will fulfill your obligations to complete that contract. So margin calls in volatile markets are higher than margin calls in markets that are relatively steady in volatility. And so from my perspective, people need to understand what they're getting into. They need to understand the risk. And in the case of derivatives markets, the risk is that you may be asked to post a lot of margin in a volatile market.
And that comes with a free pair of underpants, no doubt. So
one thing that I don't want to minimize here is that our markets have traditionally had an institutional clientele, unlike the SEC, where they have a much more retail-focused market. We are grappling with, and it is something that I think about a lot, the increased interest from retail in the derivatives space. Now, this is something that is it's not new to us, it's just never been on such a scale that we've seen retail interest in our marketplace.
That's not just crypto, you're saying that's everything.
Yeah, so we're seeing exchanges develop what are called micro contracts for things such as oil, because retail market participants don't really have interest in the large contracts that we've traditionally had in energy products. So yeah, there's definitely an increased interest and an increased desire to engage retail market participants with derivatives products.
That kind of goes in tandem with what you were saying with futures all across the board. this is something then where you all have meetings, you all have a game plan on seeing how this is going to be developed in the future in terms of how crypto is going to be sitting side by side with the non-crypto products that are being offered. So I guess I want to ask you this last question, which kind of is a much broader stroke, which is the U.S. government and their creation of eventually, which I think is something which is going to happen. When, I don't know, but it's a definite from what I think. As you know, China has their CBDC, and the United States is probably, unless you want to give us some really great inside information on this podcast, I'd be very grateful for. But, it's not really inside information because for the longest time, the U.S. government has talked about the digital dollar. They've talked about this. It's actually funny because I think there's multiple digital dollar committees, and I'm not even sure that each one of them know that they exist. And of course, with the creation of a digital dollar, which of course is basically a centralized digital currency, i.e. cryptocurrency. First of all, do you see a U.S. CBDC being developed in the near future? Number two, do you think, given that the United States, first of all, answer that one, then I can actually ask my second question. Do you see a U.S. CBDC being created in the next 5 years?
To be honest, Aviva, I don't have insight into that since it's well outside of conversations I'm a part of. I will say this, given the amount of attention that's being applied to this topic at the Federal Reserve, and I know they're going to put out a report soon, I do think that they wouldn't be devoting this much time and attention to something if they weren't serious about the possibility. And to be honest, we don't want in the United States, I think design, this is my own personal view, and maybe one that is being considered at the Federal Reserve, design matters. And the goal is not to get it right. The goal is to get it right, not to go first. And so the fact that other countries have developed their own, CBDC is great and fine. But we have to really give thought to the design because there are some really big policy issues and considerations. And you brought up China. Interestingly enough, I think, in the United States, we need to really give thought to privacy considerations. How much surveillance does the government need of everyone's, exchange of currency? That's what we're talking about here. So that's just one big policy consideration. And so again, the design of this matters. So I do think there's genuine interest in the development of a U.S. dollar CBDC, but I don't necessarily think we're rushing to get there because we think we want to, if we're going to go down the path, we need to design it in such a way that fulfills real purpose and addresses gaps that are currently out there without doing any damage. What's the proper role of the government, an everyday average American citizen, or anyone for that matter, wanting to transact in CBDC or any currency for that matter?
I actually agree with you, very much so. I definitely don't think that being first to post it means that you win the game. And I do think that there's a lot of thought that needs to go behind such a project. But what I will add to that is my last thing before we close out, which is, do you really think that people in government capacity really truly want to see something go head to head with the US dollar, such as Bitcoin? Because in my opinion as well, Dawn, I don't think that Bitcoin is going to be the daddy for forever. I think if at all permitted, or Lord only knows what this future space looks like, you have to remember somebody said, hey, listen, Zuckerberg, we really love your Libra/DM/ today's name is. Yeah, we're going to give it the approval. And I'm just saying it doesn't have to be Facebook, but we just need a company with a sizable enough user base. It could really, really wreak havoc against the US dollar. Do you agree with that?
Potentially, yes. And I don't want to suggest that, the two cannot be complementary or cannot simultaneously exist, but I'm certain it's not my role in the United States to think about how we protect the US dollar, but we all appreciate the importance of the US dollar as a global currency. And we don't want to jeopardize the United States position in that regard. So I'm certain those things are being given thought by the Fed. It's just beyond my day-to-day considerations.
Well, you know what? It's still fun to talk about them.
So many policy considerations that they must be considering. For example, like what about, how does this impact, if the goal is disintermediation of large financial institutions, and I'm not suggesting it is, but I've heard that. If that's the goal, like how does that impact the large financial or any financial institution's ability to lend money? They're not taking deposits. How are they going to provide mortgages? There are just some really interesting policy considerations here.
There's a hell of a lot of consideration. That's a week-long podcast. You're gonna need your Snuggie and a cup of tea for that one.
At my former colleague, you mentioned former chairman Chris Giancarlo.
Yes.
He's done a tremendous amount of work in this space, and I think he is well regarded. And kudos to him for leaving the CFTC and picking up in an area that is somewhat, it's very interesting, but somewhat different from what we traditionally have considered at the CFTC. And he's a very smart man. So I think it's interesting that he has chosen this topic as his quest in his new life.
Yeah, I think it's also very interesting. I have a lot of questions when people actually do leave a position like that and, for instance, join a private blockchain after you've served in the SEC, CFTC. I'm not so sure sometimes that's such a good move. That's just my opinion.
Yeah. No. And I think, it's probably, maybe I'm wrong, it's probably, I hope, an indication that some of these entities want to understand the regulatory structure, which I applaud. I hope it's not the case that they think these folks can somehow get them exemptions from the regulatory process.
Yeah. Go and hire ex-employees of the government because they're trying to figure out ways to poke through those Swiss cheese holes. To me, it's just a sticky wicket, as we would say in the UK. There's a line in the Big Short. Yeah. There's a line in the movie where the girl, she's sunning herself next to the swimming pool. And he goes, "You work for the SEC, don't you?" And she goes, "Yes." She said, "But I'm talking to Goldman Sachs a minute because I really want to work there." He goes, "You can do that?" And he goes, "And that's legal?" That's literally like the two sentences he says after that. And I believe the same thing because there's so many things that you obviously know when you're working in that job that when you leave, it doesn't smell right. But Commissioner Dawn Stump, I want to thank you so much for coming on to Crypto and Blockchain Talk. It has been an absolute pleasure.
Thank you. I really appreciate the opportunity to clarify a few things. Now, recognizing that everything I've said is complex, and I want people to understand how complex it is. I am a strong believer that we should encourage innovation, but I also feel very strongly that it's our duty as a regulator to provide the public with clear guidance as to how they can comply. Our laws will not cease to operate as a new industry develops, and those individuals who are going to be subject to them may find themselves subject of an enforcement action. We're not clear about how they can comply, and we can genuinely apply our oversight, especially when we take enforcement actions, only if we explain to the public what the expectations are. So I appreciate the opportunity to clarify a few things. Always happy to join you again. I feel like we just scratched the surface, but thanks so much for the opportunity, Aviva.
Do you know what? I would love for you to come on again because the more education we push out there, the more everyone will be grateful for it. Well, on that note, I'd like to thank everyone for tuning into this week's edition of Crypto and Blockchain Talk. Remember to tell your friends and family to download any of these podcasts on any of the podcasting platforms that are listed on cryptoandblockchaintalk.com. The list starts with iTunes and goes right through Podbean, Spotify, Stitcher, SoundCloud, all the way through to Verbal, over 70 different podcasting platforms. In addition, these podcasts are streamed 24/7 on our sister radio station, crypto24radio.com. Again, we love to hear from you directly, and whether you leave really beautiful comments on our social media platforms of Twitter, Facebook, or Instagram, we love to hear from you first and foremost in person via email. So please email us at education@savvydigital. That's education@savvy, S-A-V-I-I, digital.com. Again, thank you so much for tuning in. We know that you have a huge choice of podcasts to listen to. So when you tune into us, it really means the world to me and the entire team here at Savvy Digital. So please be safe, take care, and goodbye for now.